Hello, everyone, and welcome to the HR for Health COVID-19 webinar. I'm Kimberly Fuller. We are in some very trying times, and we know that you are hearing a lot of information out there about what you should be doing with your practice and your employees. So today we're going to be doing our best to provide you with the most up-to-date information and to also answer all of your questions. Speaking of questions, one of the benefits of this webinar is the Q&A session. So make sure that if you have questions, you can put those up in the upper right-hand corner. A little bit of background, HR for Health is a cloud-based human resources software designed to simplify human resources for healthcare practices while minimizing legal risk and ensuring compliance with federal and state laws. Our esteemed presenter today is Ali Oromchian. Ali is the co-founder and CEO of HR for Health and also a founding attorney of the Dental and Medical Counsel law firm and one of the nation's leading legal authorities on topics relevant to doctors. Clients seek Ali's advice on HR laws, practice acquisitions and sales, creations of corporations and partnerships, associate contracts, estate planning, employment law matters, office leasing, and state board defense. So very many things, right, Ali?
Yeah, sometimes too many.
I am very pleased to introduce Ali Oromchian.
All right, Kim, thank you so much, and welcome back, everyone. Been really excited to kind of get into this format with you because, as most of you know, we've been doing a lot of these Facebook Lives so that we can get you the information as rapidly as possible after we've had a chance to kind of digest it and go through it. So now that we are at a different stage in the laws and what has been passed and whatnot, we thought that this format would allow us to get you even better information, even more information on some very technical things. And so doing it through this presentation format, we think was the best. Now, what I'm excited about to share with you is that there's been a lot of changes just in the last couple of days. Since we started doing this last Monday, I don't think I would have ever imagined so many rapidly changing things occurring. But, our goal is to give you this information unfiltered and yet accurate. And that's the key, is to get you as accurate information as possible, because there's so much misinformation out there, and not because anyone I think is trying to do any harm, but rather because people are jumping the gun on some of these things, and some I think are hoping for rules to mean something that they may not mean. And so we hope you take this information and you take it to your advisors or whatnot. Now, this is going to be broken down into a couple different sections. We're going to go through that now. So the first is the FFCRA. This is the paid sick leave and paid FMLE aspects of the law that were passed, last Thursday, and we're going to go through some details about. We got some really great news last Thursday night, actually, about this, and that's why we had the Facebook Live in the morning, and many of you attended, which was fantastic. We're going to share that information again because some of you did not get a chance to see that. And then we got some more information last night, Sunday night. That's also really good news about the exemption for small businesses that's going to apply to many of you. So again, really good stuff. In the middle of the webinar today, I'm going to be sprinkling in a lot of FAQs, questions that we have gotten from around the country over email and phone and Facebook and other social media and text messages, maybe a little too much on the text messages, but over text messages as well. And so we are trying to answer all of these things, and I'm going to sprinkle these FAQs all throughout the information you're going to get today. And then, of course, we're going to talk about the CARES Act. That was what was signed by the president just last week on Friday. It is law, and it is now applicable to everybody. We're going to go into great detail about this so that you're armed with the latest information to take to your advisors. Now, which advisors? The advisors are your CPAs and other financial folks that are working in your practice and for you and your families. A lot of this is not necessarily HR stuff, and so the HR for Health team is more for the FFCRA questions, but the CARES Act, highly technical, there's a lot of formulas, and so your CPAs and other financial advisors are really the key there. Of course, there are components of HR too that our team will help. finally, we'll talk about some items that we've gotten requests for from around the country of clients asking, look, I'm sitting on my hands. I'm not doing anything right now. I'd love to, get going on some of these other strategies, for my office. How can you help me? And we'll talk about that. And then finally, we're going to end with some exclusive resources for you, places for you to go for the latest and greatest info, and also a link for the loan application so you can get your loans going quickly and efficiently with some of the best banks in the country. All right, let's jump into it. OSHA. So as most of you know, by the end of April, we're going to have some new guidelines from OSHA for the COVID-19 epidemic. There are going to be new rules set in place to minimize its transmission. This is really important information for a lot of reasons. One is that at the end of the day, we want to keep your team and you safe, and the patients, right, from droplets and aerosol. Vital to know what these rules are. The second aspect of it is this is going to be a big aspect for marketing purposes as you look to ramp up the office as the doors open up and patients are coming back. They need to know that they're in a safe environment. And so these new OSHA guidelines, very, very important. That being said, I highly encourage you to contact your local OSHA person and make sure that they've got you on their list, that they're ready to come in and help you get compliant as soon as possible. Next, let's talk about the emergency sick leave. As most of you know, the federal government has now defined full-time as 80 hours, hugely important because that's their definition of full-time. Now, most of your offices are not open, 5 days a week, and you don't necessarily have teams that work 8 hours every single day, even if you are open 5 days a week. So the part-time equivalent is probably very applicable to you. What that means is that if you have employees that work less than full-time, they work part-time, then those employees need to be paid on that average for the 2-week period. What does that mean? Let's do it by example. Let's say you have an employee that works 4 days a week for 8 hours a day. That's 32 hours a day, or a week, I should say. For a 2-week period, that's 64 hours. That 64 needs to be paid at their normal hourly wage. All right. So that's the emergency sick leave. There's a lot more details and whatnot, but we're not going to necessarily go through those because there's a lot of other information that I have tied to that in other videos. Okay. So the next thing is the Emergency Family Leave Act. Okay. So here, if you have any employees who have children under 18 years of age who are home because of school closures, daycare closures, or whatnot, preschool closures, then they can take this leave. All right. Now, again, it's 2/3 their salary or hourly rate. So again, very important information, but not necessarily information we're going to dive into right now because there's a lot of information that we've already put out with this. What the good news regarding these two that came out on Thursday night was that the Department of Labor clarified that as long as your offices are closed as a result of either lack of business or some sort of federal, state, or county guideline, then you are not obligated to pay this. So if you prematurely terminated all your employees as a result of one of these two things, thinking that you would have to pay that out, well, the good news is that you don't have to pay that out. Now, does that mean you should hire your team immediately? No, not immediately. Maybe we have to go through some sort of assessment. We'll talk about that as we get through the CARES Act and the loans and everything. But there are reasons to either bring them back now and start getting your HR house in order, or maybe waiting a little bit. And I'll talk about that more in a second. But that's a really great piece of information that came out, as I know most of you were very, very worried about that, justifiably so. Now, there's an FAQ updates that are being put out by the Department of Labor. A lot of great information to really get into the minutia of this law, and they're doing a really good job of asking questions and answering them in really clear language. So you're about to get a link for that so that you can follow it and review it. I highly recommend you do that and keep that link handy. Why? Because I want you to tie it to this notice that you have to send all your employees by April 1st. That's obviously coming in 2 days, so you need to send it between now and then. This notice is drafted by the Department of Labor. Hugely important for you to know that. You may not agree with the language. You may think it's vague. You may think it's inaccurate. You may think it's setting expectations that are not what the law says. I don't disagree with you, but neither you nor me, right, nor anybody else that you know can make this change, right? It does not matter what our opinions are to it. You have to give this to your employees. The reason why I'm recommending you give it with this FAQ link is because the FAQs answer a lot of those questions that people are concerned about, your team is concerned about. They're asking questions about, well, I heard from my friend who's this person, who's that person, that you have to give us 2 weeks or 3 weeks of pay. Well, you know what? The FAQ absolutely goes into that, so that clears it all up. So you don't have to be the person to break the bad news. So now, how do you get this notice out? Since we're all, no one's working really. If your office is shut down or whatnot, what you should be doing is you should be emailing this notice to all of your team. So email it out to them so that you have record of it going out. And then on top of that, next time you go back to the office, or if you're close to the office now, just go and put it up in a conspicuous place, maybe a lunchroom or a locker room or somewhere where the employees can see it. Finally, we're going to talk about the exemption because we got some really good information about that yesterday. And so I want to go through that because now, if you fit a certain guideline, you could be exempt from this requirement, which is really, really fantastic. So let's talk about what the small business exemption. As many of you know, to be exempt, the law says right now that you have to have fewer than 50 employees. And as a result of that, if you have fewer than 50 and you're not financially viable, then you're exempt from the requirements of the FFCRA. So what does it mean not to be financially viable? And that's what we're going to get into now. There's three aspects to it, right? There's three different aspects to it, and you have to fit into one of these three aspects, okay? Any one of them is fine for you to fit in. So let's go through them now, all right? So the first one is that your expenses, right, have to exceed your revenue from your office and cause the small business to cease operating at a minimal capacity. Okay, so that, what does that mean? That means that not only does your expenses exceed your revenue, but you must also cease operating at a minimal capacity. Now, we don't know what that means, minimal capacity. Does that mean if you see one patient or whatnot, is that minimal capacity? I have no idea. What if you only have one staff member and you? We don't know. We don't know what that means. Hopefully we'll get some guidance over the next few days. The Department of Labor has been sending out a lot of material, so we'll see what they say. But that's the first portion that you can fall into. The next one is with specialized skills. So what it says here is that the absence of an employee who is requesting leave, or under either sick leave or medical leave, if that would create a substantial risk to the financial health or operations of your business, okay, right, because of their skill, knowledge, or responsibilities, then you can fit into this category. So what does this mean? That means that if you're a small office and you've got one hygienist, and that hygienist not being there prevents you from operating, then that could be you could fall into this category. Or if you got other team members, let's say you got an optician or someone else who's highly skilled, or because their responsibilities are important or whatnot, and they are not in the office as a result of this leave, then you could potentially be exempt as well. All right. Now, the third and final portion is whether there are sufficient workers who are able and willing and qualified to do the work you need, okay, and if these are needed for you to keep open and operating at a minimal capacity. Okay, so if you have, and this might be a very real thing, if you have a large group of employees who are very nervous about returning to the office because of COVID-19, then this is a very real thing. You might be in a situation where highly skilled, highly technical, people with a lot of responsibility in your office are just not willing and able to come back. right? That's a really, really big deal, right? Really, really big deal. And so you need to know this as you kind of are planning your next step, because this might actually, you might actually fall into this category, right? So it has to be one of those three things, not all, just one of those three things. Now, remember what I promised you, the Department of Labor fact section. Look at this. This is what you need. This is the link you need to give to them. If you give them this link, right? If you give them this link, what's going to happen is that they're going to have access to all of the latest and greatest information that the Department of Labor is putting out, okay? This is a vital, vital part of it. And it's a part that I'm highly recommending that you use to give them. Now, the reality is that the Department of Labor really wants you to work with your employees. They want you to work with them as opposed to against them in this trying time. Now, this is one of the main reasons why we never recommended terminating the employees early on, because we know that these are highly skilled, highly technical employees that you need when you open up again. That being said, communicate with them, tell them what you're planning, tell them what their rights are, tell them as much information as you can so that they're knowledgeable and they know what your plans are. If you've already terminated them, we may have some options for you to minimize the impact on the office. So all is not lost. And as we kind of talk, we'll talk about a strategy that fits really, really well for you. So don't, be afraid of that. You're not alone, right? Hundreds and hundreds of companies around the country, dental practices, optometric practices, vet practices, medical practices, terminated employees. And so we will work with you to make sure that they come back on board safely and accurately and well. All right. Now, let's shift gears a little bit to the CARES Act. Now, the CARES Act, as most of you know, is the new law that the president signed. And there are different aspects of this that we're going to talk about. But here's the caveat that I want to share with you. Everything we've talked about thus far, regarding the Families First Corona Response Act is very HR related, very heavy on law and HR, which is one of the reasons all of you have been so fantastic to communicate with HR for Health and signing up with them, calling us and calling me and having consults. You've been wonderful and we love you and we appreciate you and we appreciate your patience as, we're handling a ton of volume. Now that we're shifting gears to the CARES Act, this conversation becomes less HR, less legal, although there's a lot of legal too, but less HR and more on the CPA financial side. So my goal is to share a ton of important information for you to take note of and go to your CPA and your financial advisors and let them help you navigate through this. This is vital for them to help you navigate because this is their forte. This is what they do best, okay? So let's go through this in detail. The first is the corporate tax relief, right? So the corporate tax relief is the part about of this that some of you may know and some of you may not know, all right? So we're going to go through that in detail. Then we've got the next portion, which is the payroll tax relief. Again, the payroll tax relief is not necessarily something that's really discussed about, but we're going to talk about that too and how you can take advantage because there's some really neat stuff in there for you, to help with cash flow. And then, of course, we're going to talk about the different business loans and what your operations can do there and whether you should get a loan or not. Again, a lot of information so you can take it to your CPA. And then finally, it's got the forgiveness portion. It's got its own section with me because I know it's such a big thing for many of you and you're very concerned about it, but this is where you need to do it. All right, so let's go into it in detail. The corporate tax relief portion. So the first thing is this net operating loss, okay? So the net operating loss is something that, before, it was somewhat limited. Now, right, between, you can take losses from 2018, 19, and 20 and carry it back to the preceding 5 years, right? So this is great. So if you are someone who, maybe you did a huge improvement and you added operatories or you did some new construction to renew the office, or maybe you're young in your business and you've had losses for many years, now you can go back and carry it back to the 5 preceding years. Then also, right, it can fully offset taxable income. huge, right? Huge, 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 because before this, it wasn't, you could only do it to 80%, but now you can offset it fully. So imagine if you went to your CPA and you said, look, is this something that I can take advantage of? Because you can potentially amend your returns and get a refund. So again, helps with cash flow, very important. Let's talk about the next thing, which is the increase of the interest expense deduction limitation. So under current law, a corporation is only allowed to deduct the interest expense it pays on loans to the extent the amount does not exceed 30% of the office's income, right? Adjustable taxable income. So this isn't something that people love very much. Tax experts and whatnot, that 30% just wasn't enough. Well, the CARES Act has increased that limit to 50% of the income for 2019 and 2020. Okay, so that's in of itself really good. But here's another kicker that's amazing. It would also allow you to use your 2019 adjustable income, your adjustable taxable income for 2020, which basically means that it ensures that even though your earnings may be harmed because the office is closed, which of course it is, right? This increase will allow you to still use the interest expense deduction in 2020. So basically, it allows you to use it even though your income has fallen. Again, I'm not expecting you to become tax experts. It's one of the reasons I'm doing this a little bit more high level, but really good info for you to take directly to your tax advisors and ask them for help. The next thing is a refundable minimum tax. So if any of you have corporations that have been subjected to AMT and you've been paying tax as a result of that, that's no longer the case. They have absolutely repealed that for now. So what that means is that you can get a refund for potentially having paid into AMT, and that's great. That again helps with cash flow. AMT is highly specific, highly detailed, and very personalized. So make sure you talk to your CPA about that as well. All right, let's talk about the payroll tax relief portion. So now we're going from corporate tax relief to payroll tax relief. So the first thing on the payroll tax relief that I want to talk to you about is the employer payroll tax delay. Now, what does that mean? As you know, employers ordinarily have to pay certain employment taxes. FICA, and it includes 6.2% of the Social Security and 1.45% of Medicare. Well, this now allows you, the CARES Act now allows you to defer paying your portion of the Social Security payroll, the 6.2%. So as a result, now, and this goes through December 31st of 2020. So what that means is that you don't pay it for this year, and then it's the payments that you do end up having to pay are deferred into 2 additional payments. So now that's going to be due on December 31st of 2021, and then the other half is going to be due December 31st of 2022, right? So again, pushing out these payroll taxes more and more to give you a little bit more reprieve. So make sure you're working with your CPA and payroll tax professional. All right, let's go to the next section, which is the employer payroll tax. I'm sorry, we did that one. Let's go to the employer retention payroll tax credit. All right, so this is something that does not get enough attention, and I think it's so important. So what the CARES Act has done, it's provided a refundable payroll tax credit for 50% of wages paid by you to your employees during this crisis. And it's available to anybody who has, 1, operations that were fully or partially suspended to COVID-19, which, many of us are in that situation. And this, by the way, it's not just fully, it can be partial as well. So for those of you in Florida and Texas, where maybe it's not a state mandate, but you're only partially shut down, this applies to you as well. Or, right, so either you're fully or partially suspended, or your gross receipts have declined by more than 50% during the same quarter of last year. Again, same kind of benefit as we talked about to those of you who are not fully closed. Now, the credit is based on qualified wages that are paid to the employee. all right? And there's some very specific things if you've got more than 100 employees or whatnot, but with anyone that has fewer than 100 employees, which are most of you on this call, all employee wages qualify for the credit, okay? And that's important. And the first 10,000 of the compensation, which is where this credit is applied against, includes health benefits that are paid to the employee. So again, very important and very, very beneficial to you potentially. Now, this credit is provided for any wages that are incurred between March 13th through December 31st of 2020. Okay, so March 13th through December 31st of 2020. All right, so again, hugely important. Talk to your CPA about this. I'm not expecting you to be an expert. All right, now let's get into the business loans. Now, the business loans are the big topic of conversation, of course, because everyone wants to know about them, and as you should, because there are a lot of information here. Now, all of these loan programs that we're talking about, are falling under the federal 7A program. You need a private bank to help you with it. There's going to be a lot of banks that actually help do this. But what I can tell you is that there's going to be one bank that we're going to recommend because they are the leader, and we'll go through that in a second. So the nice thing is that the Act, right now allows these lenders to make some decisions, not necessarily regarding your repayment abilities, but rather regarding your credit and whatnot. And so it's a little bit more flexible than usual. Now, the first loan is called the EIDL loan, the Emergency Economic Injury Disaster Loan. All right, so here, this grant allows an eligible entity who has applied for the EIDL loan to request an advance of $10,000, which the SBA has to do in advance. Okay. Now, the personal guarantees on loans below 200, we believe, are waived, but the business has to be operational for 1 year, which is great. And you don't have to make any payments for at least 1 year after the loan origination as well. Okay. You can get up to $2 million. So this is not a loan that is forgiven, but it's like a real loan, but very low interest rate and a longer term in terms of paying back. So this may be something you can take advantage of and need, especially for cash flow purposes. The next one is the Paycheck Protection Program. All right. So the Paycheck Protection Program is really intended. The goal here is very simple, right? Their goal is primarily to make sure that you are bringing back your team. Now, there's a couple things that are very, very important here. So one is that this is the forgivable loan. This is the loan that is forgivable. This is the loan that everyone's been sort of talking about. But there are very specific things that you need to do for this to be forgivable. And we're going to talk about that a little bit. Now, what you do in terms of figuring out how much you can actually get under this program, you must take last year's average payroll, excluding anybody who is making over $100,000. You take last year's average payroll, and then you multiply it by 2.5, right? So whatever the average monthly payroll last year was, multiply it by 2.5, and that's your maximum that you can take out of this program. Now, once you get the money, right, you can get some of it forgiven. What's important to know about the portions that you can forgive is that it's not the entire amount necessarily. It is the amount that you spend in an 8-week time frame from the time the funds get dispersed. This is really important for you to know. So from the time the loans get in essence get dispersed to you, you have 8 weeks, right? You have 8 weeks to spend that money, and what you spend it on then makes a difference in whether it can be forgiven or not, right? So you can use it for payroll, paid sick leave or medical leave if you're open for business, insurance premiums, mortgage, rent, and utility payments. And so you can use it for that. And then there's a deferment for 6 months. Okay, there's a deferment for 6 months. The interest is capped, as you can see on there. There's no prepayment penalties. But in order to figure out whether or not it's forgiven, which we're going to talk about in a specific, you have to work very closely with your CPA, right? Absolutely, you have to work closely with your CPA, because this is where the rubber meets the road. Otherwise, it's going to be like a normal loan. All right. So let's go into detail about this. And I'm going to make this full screen so you guys see everything. So here are the details. So the forgiveness on the loan is equal to the amount spent by you during this 8-week period after the origination date. Okay. After the origination date. So on things like payroll, interest payments on mortgage, okay, utilities, rent, and all of these things, the mortgage, the rent, the utilities, all that has to have been in place before February 15th of 2020, okay? Before February 15th of 2020, right? The potential, okay, is the way you can kind of figure out what the amount is that is going to be forgiven is you take your payroll cost plus you add any payments of interest on any mortgage obligations, plus any payments for rent obligations, plus any utility payments, right? And that's how much can be in essence forgiven if that's what you wish. Now, if wages are reduced year over year, the loan forgiveness will be reduced proportionally. Okay, again, this is why you need a CPA to help you with these calculations. But if the wages are reduced year over year, the loan forgiveness will be reduced proportionally. Okay, and as I mentioned, it doesn't any employees you have, associates or yourself that are or highly comped office manager that are making over $100,000. This also may include some very highly compensated hygienists, may include highly compensated opticians and others. Anything over $100,000 is not included in these calculations. Now, remember what the purpose of this new law is in this program. It's to encourage folks to rehire employees. So if you have terminated your employees, this is your opportunity, right, to rehire them, okay? And if you rehire them, before, or at the beginning of this period, you will not be penalized, right? So if you rehire them before this, you will not be penalized. So very important. So some of you are going to ask, well, should I go rehire them right now? Well, maybe, but you need to talk to us and figure out the timing of it. Because here's the scenario, right? Right now, we don't know when the offices are going to open again. So we have to kind of calculate this and plan for it strategically. If you are an HR for Health customer, this is very easy for you because you're already set up. You can, you've actually, if you've taken the steps of terminating everybody, final paychecks and all the termination documents, they're truly terminated, then you're going to have to go through the process of using HR for Health to rehire them. Again, super easy, couple clicks, all the new hire forms get sent to them and whatnot. You do have to make some decisions about benefits and things of that nature, which, our team can help with, or we'll put out some papers on it. If you're not an HR for Health customer, it's vital for you to start thinking about what you want to do with regard to your employees. So what I mean by that is that, okay, you've already terminated them. Well, instead of hiring them back on immediately, let's start to plan for bringing them on strategically. So making sure you have all the new hire documents, you have an updated employment manual, you're doing all the things, set up in our system so that when you do bring them on, it's effortless. That's the key. Let's make it effortless because our system is all on the cloud, right? It's unlike any other system out there. There's nothing like this in healthcare. Why did we go paperless? Because we wanted it to be easy. With a couple of clicks, all the employees get the documents in their emails, they fill it out, they send it back, electronic signatures, you're good to go. Then, once you've done that and the employment manual and whatnot, then we can start to prepare for bringing them back on. All of this takes some management, of course. All of this takes some management because you can't just do this and then open up your doors. You need your employees there. But this is your get out of jail free card. The law says that if you fire these employees, you can bring them back on before this loan origination period without penalty, all right? Without penalty. So keep that in mind. Now, there is some confusion out there as well about the EIDL loan and how if it can be mixed and matched into this, PPT loan. So what they have made clear now is that if you have, you cannot get an EIDL loan and a Paycheck Protection Program loan for the same purpose, right? For COVID-19, you can't get both of them for the same purpose. But if you have an EIDL loan from before, unrelated to COVID, you can, if you choose to, you can basically refinance it into the Paycheck Protection Program, right? You can bring it in there. So that's important for you to know. Only if it's the EIDL loan was for non-COVID reasons. And that $10,000 credit that you may have gotten up front goes, is taken off of the forgiveness amount of your loan. So again, let's, think about that. All right, now let's move on to some of the individual aspects of the CARES Act, because we've been focusing a ton, as you know, on the corporate business side of things. So on the individual aspect, the government has increased unemployment for most folks. They're increasing about $600. Now, what's important to know here, what is really important to know here is that this is not necessarily going to be accepted by all states. We do expect it. We do expect most states to take it on, but what the federal government has done is set some specific rules. They've said, look, states, if you want this money from us, you want this relief, then you got to agree to our terms. And their terms are actually pretty good. There's a lot of detail to it, so I won't bore you with all of it. But basically, the terms, cover almost every employment situation. So, because they're hoping to get this money into as many people's hands as possible, because it's $600. I mean, that's a lot of money. So they are looking at this, to do that. Now, that being said, there's a couple of things you need to know. Some of the questions we get is, well, between that and state unemployment, my team may never come back and work for me. They may just want to stay home. And that is a possibility, depending on how much you're paying them. Now, we don't think that we don't think that the state agencies will ever allow somebody to make more than they were earning, pre-unemployment. I'm hoping they have some system in place that allows that to be there, but who knows? We don't know. But in theory, they will make less than working for you, but maybe not much less. So hopefully, you've got a great relationship with your employees. Hopefully you've communicated with them, and hopefully they understand that long-term unemployment will end, even though the federal government has extended it an additional 13 weeks. Hopefully they will, come back and want to work for you, but that's where the communication and things, is really, really vital. Another piece of really good news about this, just so you guys know, is that the federal government has put in safeties where this money is coming directly basically from them. So it doesn't actually increase your unemployment rate. Now, I never want anybody to ever worry about their unemployment rate for a lot of factors. At some point, we'll put out something for you to review regarding unemployment, but just don't worry about it, right? Your rates will naturally go up because the state unemployment agencies are going to be up in their neck in claims, and the state's going to be in the red again, just like it was in 2008 and 2009 and 10. So everyone's rates will go up. Yours will go up too. There's caps for every employee. There's a lot of reasons not to worry about it. But so if you're thinking about filing for yourself or letting your employees file, don't fight it. Just do it. There are increases to charitable deductions that now you can take advantage of, and also, although they haven't sort of given us a ton of details, employers, can pay student loans on behalf of employees now, and it won't be counted as income to the employee. So that's great. But the question is, can you file? Can you pay this? Can you pay a loan for yourself? Are you an employee of your own corporation? Most likely, or PLLC. Does the law allow you to pay? Does your corporation, can it pay your student loans up to $5,000 a year? I don't know. Another good question for your CPA. Hopefully they know the answer, but it's so early they may not. So let's talk about how we prepare for these loans, right? So this is what I'd like you to do almost immediately, because when these things open up and you're able to file these applications, it's going to be a race to the finish. So the sooner you get in, the better. I know some are saying wait and wait and wait, but I'm not. There's only a finite amount of money there, and remember, everybody's applying for this. All small businesses, not just medical, dental, and optometry. So here's what you do to prepare, right? Get your tax returns, 2018, 2019 tax returns. If you filed them already, get them ready to go, right? If you haven't filed your 2019 returns yet, then get your P&L and your balance sheet ready as well, because the banks are going to ask for that. Then go and get your payroll tax forms, your 941s for the last 4 quarters, and also Q1 of 2020, because we're about to finish Q1, so you should have that available. So get those documents ready. Your federal ID number, your articles of incorporation for your corporation or your PLLC. Every state has a little bit of different terminology for the LLC version of it, but just get that ready. They may want to see your bylaws too, although we don't think so. And then finally, make sure you have your employees, verification of how many employees you've had over the years, what their, how much their salaries were and benefits or whatever. Just have that ready. Get these things scanned, get them in a file in your folder, on your computer, save them, be ready for the next step, which is going to be to send it to the banks. All right. So how do we put all this puzzle together, right? How do we put this puzzle together? Because this is a crazy puzzle. It's probably the craziest puzzle we've all had to deal with. So the most important person you would expect me to say is a lawyer. It's not. It's a CPA. It's your CPA, right? Your CPA should be highly involved in all of these decisions because you see all the formulas and all the decision makings that are unique to you. No one can tell you what you should do really but your CPA, because there's no rule that applies to everybody. Everyone's financial situation is different. And so you need to work with your advisors on that. If your CPA is not comfortable or they're overloaded or whatnot, and you want some names, there are some really great dental CPAs throughout the country, optometric CPAs throughout the country that we have talked to, and they are willing to work with clients on an individualized basis as a service. So let us know, right? I'm sure your CPAs are great, but if they need to know how to manage this, and so there are some really good ones, let us know. We're happy to give you some names. HR for Health, of course, if you're an existing client, thank you, for that, and thank you for your loyalty. And we hope that everything we're doing is serving you right now the right way. Continue working with us, asking us questions. Let us guide you in terms of that, especially if you've laid off employees. If you're not an HR for Health customer, this is the time to get your HR house in order. It's super simple. Get onboarded, get your new hire forms in place, get your manual in place. Let us guide you through this time because your employees need you. Live Oak Bank, right? There are a lot of lenders out there who are going to help you do this. That being said, Live Oak Bank is the top, I think it's the number one lender on SBA now for small businesses, and they work heavily with doctors from around the country. So they are our go-to bank. It's not to say that there are not other banks that can do it for you. Absolutely. But they are dialed in. First of all, they're the top bank, right, in the SBA side of things. So in that sense alone, you want to work with the top one. Two, they have a ton of experience on dental, medical, optometry. So they're there. They've done real estate deals for our clients for years. So they are there. And there's no strings attached, right? They don't have to pay anybody. They don't have to do anything. They are just working directly with the SBA on this. So you have to, my recommendation is to work directly with a lender. There are a lot of folks out there who are trying to put together packages and promising you to be first in line and promising you a lot of things. Ignore all that. Nobody has a direct line with the SBA like that. The Live Oak and some of the other top SBA lenders are as close as you're going to get to that. The, part of the CARES Act was a lot of money was given to the DOJ, the IRS, and other agencies because they're expecting financial fraud. They're expecting identity theft. They're expecting this. So take your information, be careful with it, right? It has social security numbers. It has corporate ID numbers. It has addresses, birthdays. Don't just send it off to somebody who's giving you promises, right? Go directly to your lender. If you don't know anybody, go to Live Oak. If you know somebody and you trust that they're going to do it well, all right? Just go ahead, do it that way and protect yourself. Dental and Medical Counsel, obviously, our law firm is here to support you on anything you need. And these are the things that our law firm can do for you during this time where you're trying to, you're at home and you're trying to get your legal stuff in place as you're navigating all of this. If you're having a hard time with your landlord and you need a lease deferment, come talk to us. There may be a way for us to get you some lease deferment through your lease. What I would need to see is your lease. And then we're doing basically, a package where we just review it and then guide you to it. And if we advise you that you can, then we will help you contact the landlord. If you need cash flow, refinance your loans, contact us. If you need help kind of talking to a lender about this, they are now doing, there's a bunch of them around the country, but a couple of really big ones that are doing 10, 12, 15-year loans at 3%, 3.5%. I mean, incredibly low. So if your loans, that you have right now are on the higher end of those rates, right, they're in the 4s and 5s, it might be time to refinance. It helps you with cash flow. They have deferments in place. So we're happy to make introductions, of course. Estate planning, if any of you have living trusts that you want to do now for your families, since you're at home and you've got a lot of time on your hands, if you want to get your living trust, you want to do powers of attorney and things of that nature, we can 100% help you there. And then finally, we've gotten a lot of requests for trademark applications. It's going to be a little bit slow, but if you've got a unique logo, you've got a unique name, you want to protect it, get in touch with us and we're happy to help you. We can do it very quickly. Okay, so let's get into the resources. Okay, so here's probably one of the most important pages today. So first, here's the website for HR for Health. Here's our law firm website that you can reach out to us. Here's the link to the Live Oak interest page. So you go on there, you fill out their forms, you will go into queue. They will get in touch with you as soon as they are ready to take applications. Remember, if you do the things I mentioned and you're ready to rock and roll, you'll really be ready to rock and roll. And you have to be patient. There's going to be some delays, but they will get you there. Resources for employers. This is an HR for Health resource. We have a lot of stuff that we're updating all the time. Please bookmark this. Go visit it all the time. Refresh your page. We've got some really great things for you, a lot of forms, a lot of letters, a lot of things you can use with your teams. And then, the DOL fact section that we talked about earlier, I gave you a smaller link. Here's the full link. Feel free to use this as well as you get into the next stage. All right. So thank you guys so very much for attending. I know this was long, but I hope you find it useful. Remember, reach out to us on any HR matters, on any questions you have. Reach out to your CPA, do a cash flow analysis. Always come back to us if you need referrals or anything like that. We're happy to make them. We've got a great, strong network of folks around the country. So thanks again, guys. And then Kim, I think we have questions. I see a lot of questions coming through.
Yes, absolutely. Hi, Ali. Thank you so much for all that amazing information.
Yeah,
that was fantastic.
of course. You're
Well,
welcome.
too many questions to even, begin to get to all of them. So let's just do some of our top questions here.
Okay.
Here's a big one. What if I already laid my employees off? Do I need to rehire my staff? And if I do decide to rehire my team, what are the steps that I need to take?
Yeah, so if you've already laid them off, as we talked about, and and you're an HR for Health customer, then start talking to them about how to plan to bring them back on. Depending on whether you want to take the PPP loan or whatnot, the timing may vary. But it's a very personalized conversation that we all need to have. The second aspect of that is, if you have terminated them and you're not an HR for Health customer, then we absolutely need to strategize along all of these fronts. But it's a great opportunity for you. To get ready and then hire them back on. Don't just hire them and say, oh, just kidding. I'm bringing you guys all back on board. Don't do that. Let's plan it right so that you do it well and you're protected.
Okay, great advice. How about if an employee has filed for unemployment due to a reduction in hours but comes into the office to assist in treating patients for emergency care, how does that affect their unemployment?
So in most states, it'll reduce how much they get from unemployment. If they're working for you, any wages they earn will reduce it. In some states, it might actually allow them to not be able to get any unemployment whatsoever. But for the most part, it will just reduce what unemployment they get.
Okay. All right. And I know this is kind of something that is a basic concept, but people are still struggling with. What is the difference between furlough and layoff?
Sure. Yeah, absolutely. So layoff is just like termination, except there's with a promise of coming back once the office opens up. That's really all it is. A furlough is a government concept where people are taking some time off because the business is closed for lack of business or because of the government shutdown. And then the idea is that it will open up again, and the employees will be able to come back. some states have some very specific rules where somebody can't be furloughed for more than 2 weeks or whatnot at a time. We're recommending that people kind of ignore that for now, or at least wait until we get some further guidance from the states, because there's been a lot of things with the WARN Act and other things where it seems like they're delaying those things where it would perpetuate the termination of the employee. I mean, the whole goal is not to terminate them. So I would just, if you're truly planning on bringing them back, just sit tight and let's wait and see if we hear back from the states or the Department of Labor about that. So.
Okay. All right.
Yeah.
All right. How about, okay, if I see emergency patients, is my business considered open? So what constitutes open, and what about, if you have a front desk employee working, what do we mean by open?
Yeah, absolutely. Yeah. So if you're seeing patients on an intermittent basis for emergencies, that's not considered open. You're fine. If you want to have your assistant or whatnot come help you, that's not going to be considered being open for business. If you're like most endodontists around the nation, where you are open 4 days a week, seeing patients on an emergency basis, then it's a little bit different. You are open for business. I mean, you can call them emergencies, you can not call them emergencies. It doesn't matter. You're fully operational. Then there's that gray area of, well, I have a couple people coming in and I have a couple people working from home. So probably working from home may or may not qualify, just depending on how many hours you have an employee doing it. What I would say is this: just be flexible. If you're having your office manager or someone else in your office working 1 day a week, and they suddenly get sick or they have a childcare issue or something and they want to take that day off, just be flexible, give it to them. And then you don't have to pay them for the whole week. You just pay them for that day, because the next day the office is still closed. So just be a little bit more flexible about that.
All right. Flexible. Word of the day, right?
Yes.
Word of the week. Well, again, we don't have time to answer all the questions that everybody has, but we've given lots of resources. We want to let everybody know we'll be sending out a recording of the webinar, also links to all of our coronavirus resources that we're putting together. And we really appreciate everyone being here today, and especially Ali, thanks to you for compiling all this information and disseminating it with such a great authority. We appreciate it.
My pleasure. My pleasure. I know we're going to be doing this more often. So thank you, Kim. And thank you, everyone, for being here. And don't hesitate to get in touch with us. Thanks, guys.
Great. All right. Thanks.